Hey everybody, how's it going? So today, before I get started on the topic of today's video, I want to type F in the chat for Eli the Computer Guy. Eli the Computer Guy is one of the people that inspired me to get into YouTube and also to start posting board repair videos to YouTube. When everybody else was telling me, this is a bad business idea, your business will probably go under if you do this, I don't even want to partner with you if you do this, with one of the people that was going to become a business partner at the time, and he encouraged me. And he just hit 1 million subscribers. I beat him to 1 million subscribers, even though I've been here 3 years less than he has. And he was told he wasn't eligible for the gold play button that I was eligible for. So for that reason, we have a duck on the table today, and we're also going to have 10 seconds, type F in the chat, moment of silence for Eli the Computer Guy, who without, there's a good chance I may have never started a channel. All right, now that that's over, I want to get to the topic of today's video, which is I think there's going to be a change in dynamic between CEOs of conventional companies, investor relations of conventional companies, their strategies, and how they deal with retail investors, particularly in this Wall Street Bets Reddit days where people are collaborating and communicating together to try and find information on companies that may be undervalued or companies that have adverse conditions that may make them worth investing in. So last month, I went over this with GameStop. Long story short, you had a company that was shorted to over 100% of the available shares. This means that they're going to have to buy back in at some point. So if the price goes up, they wind up, and people don't sell their shares, shorts wind up getting absolutely screwed, and it causes the price to go up. You had the stock around $4 to $20, and then it went up to $3.50, which was a fair proof of this concept, in my opinion, at that point in time. Now, around the time that happened, about one day after the GameStop short squeeze, there was a piece of news from this company called Rocket Mortgage, or Rocket Companies, and it was interesting language used. So first thing I find here interesting was the timing. They chose to make this statement while short squeezes were pretty much the one piece of front page news all across America at that time. And in this, he says, you might want to rethink your position if that's how you're playing it. We've got a great track record and things going on. And he makes mention saying that the short sellers should be careful. So he says, this is not a stock you want to be short in, the CEO says. This is, quote, not a stock you want to be short in, the CEO says. And then a month later, he winds up issuing a dividend of $1.11 a share. At the time that this was issued, this was something like a 4 or 5% dividend that was being issued during a recession that seems to be becoming a depression based on most people that I know and speak to and read about on the internet saying they're poor. I haven't paid my mortgage. I lost my job. I don't know how I'm going to pay my rent. I haven't paid for 6 months. I'm totally screwed with a government that's mostly laughing at us. But they're offering a dividend that's fairly substantial, in my opinion, at a time when the economy is in the shitter. And so I looked into this after I started seeing it get posted everywhere. And this is a company that actually has income. So usually if I read about a stock on Wall Street Bets or some investing forum, it'll either be a stock that A, doesn't make money, or B, makes money but has some sort of fucking 900 to 1,000 PE ratio like Tesla, where even if they were to quadruple their sales over the next 1 or 2 years, still has room to grow into their present evaluation. When you talk, like, again, 1,000 PEs, just that shit's unheard of, in my opinion. Now, here you have a company that quarter after quarter actually makes money. And I looked up their earnings recently. It was something like 11 billion EBITDA. Yeah, 11 billion EBITDA. So when you take out everything else, it probably comes out to, I don't know, 7, 8, 9, 6 billion in profit. More than what they profited the last few quarters, that's for sure. So this is a company that appears aggravated and frustrated. They're saying, listen, it's a pandemic. The economy is in the shitter. And we're making money. We're making more money quarter after quarter. Each quarter, we're upping ourselves from hundreds of millions of profit to billions in profit, and then doubling on that billions in profit. Stop shorting us. That's the message that I'm interpreting from the CEO, and they seem to be aggravated at the fact that something like 30 to 40% of it was shorted, and this seems to be an interesting type of communication dynamic that is occurring between the traditional CEO and retail investors. Now, if they were to say people should buy this stock because it's undervalued or whatever, that's kind of like the old way of doing it. I think that they saw what happened with the GameStop short squeeze because of the timing of it. You see over here, they posted this on January 29th, and they are trying to communicate with retail investors on these types of Wall Street Bets like forums in a way that they'll understand. So they're not. So they'll do something like say, hey, here's a 5% dividend that we're going to pay out to anybody that buys our shares by this period in time. So they see that the short interest in their stock is going up at the same time that their net income is going up. And they post inflammatory comments about people who are short sellers, and then they just go out there and put this little piece of bait out there. Now, again, this you have to. The reason I call this bait, a 5% or 4% a dividend of $1.11 a share is not really going to do much on a company that has appreciated in value this much over just a day. So if you just take a look here, over the past 5 days, this has gone up 41%. This is insane. So from the time that they announced their dividend, again, $1 and something cents dividend when a stock has gone up over $10 doesn't mean something, because if you buy this stock at the top, if someone buys this stock at the top and then it goes back down all the way over here, your $1 dividend is not going to make you feel good about the fact that you lost $11 or $15 in the principal. I don't think that dividend was put there as a way of doing that. I think that the purpose of the dividend was to just put a little, a little bit of blood in the water for the shorts in a way to really kind of signal to retail people, hey, pay attention to us. Hey, Wall Street Bets, look at us. People out there, pay attention to what I'm doing. It's an interesting way of signaling to people, in my opinion, that you want people to look into your fundamentals, look into your financials, and get an idea of what's going on and pay attention to you if they were not paying attention before. And right after they did this company that had a lower stock value, in spite of the fact that all of this was public information before, finally started to get posted to many subreddits and many forums and started to generate a buzz about it. Listen, hey, look, we actually make money. Look, we actually make money and we're being shorted. It's not like we're a company that's failing that's being shorted like crazy. Please pay attention to us. Please look at us. And it appears to be working because, over the past few days, I've seen this stock posted virtually everywhere. And as a result of it being posted virtually everywhere, it is going up to an insane degree. Now, is this sustainable? I have no fucking idea. Again, common sense to me tends to dictate if something has gone up 40 or 50 or 60 or 80% in one day, that usually tends to not be sustainable. If it was, every one of us would be billionaires by now. And I am not a person that even remotely tries to time the market or suggest people time the market because I'm an absolute dog shit investor. I'm not even trying to get into whether this is a good buy or a bad buy. I'm not trying to get into whether this is going to 50 or going back down to 20 because I have no fucking idea. And if I even tried to pretend that I had an idea, that would just be a joke. What I'm focusing on is this seemingly changing dynamic where it seems to me like the old guard of CEOs and investor relations are trying to figure out ways to take advantage of this new paradigm where any average old retail investor, if you put 7 or 8 or 10 million of them together on a forum, will start looking through data and digging through data and trying to find deals in ways that they were not doing before and being a little bit more aggressive with their research. And I think that they've come up with a really interesting way to try and bait these retail investors into looking into their company. So they strategically released that PR or that statement on shorts one day after the GameStop short squeeze. Then shortly thereafter, when they know they're going to publish amazing earnings, they release a 5% dividend, which they don't have to release. Again, that's coming out of their own cash right there. They don't have to pay that insane dividend during an economic recession, but they are. And I kind of wonder, are they paying that dividend because they genuinely care so much about their shareholders? Or was that just a little piece of bait that they threw out there as the Wall Street Bets-ish culture kind of starts to grow to try and get retail investors to notice they exist, to bait them into looking into their company and looking into the fundamentals to actually get them to realize that, in their opinion, the stock should be worth considerably more based on their ever-increasing net income. And that seems to be that seems to be a strategy that's working based on the amount of buzz that it's getting, based on the fact that it's being upvoted on all these forums, and based on the fact that today it absolutely exploded. And I would be kind of curious to see if going into the future, the way that CEOs speak to and deal with investors changes as a result of this paradigm. Again, I've seen people over the past month that have posted rocket ship emojis on their Twitter profiles if they're the CEO or the CFO of a publicly traded company. In my opinion, that's pandering. I think that's low effort pandering to a community. But this actually seems like something that is, this seems like something where it was actually kind of thought out in a way of, how can I take advantage of the fact that retail investors are on the hunt for short squeezes to get them to notice the fact that my company is heavily shorted and undervalued? And it seems to be an approach that is working because, again, as I am doing this video, like literally from the moment that I started doing this video, this shit is mooning. And this could be the beginning of an interesting new paradigm. Also, I think it is, a small part of me is happy to see that people on Wall Street Bets are actually looking at things that make money. Like, I remember this time last week seeing people posting shit like, if sundial goes up, I will shove a sundial up my ass, or if this goes up, I'm going to circumcise myself, or making all these kinds of ridiculous bets on stuff going up or down. And they're doing this about companies that have just awful fundamentals. Like, you look at their net income, you look at their cash on hand, you look at their debt, and it's just like, why are you paying attention to this? And, part of me is a little bit proud inside that people are actually starting to look at companies that make money. This is something that I've posted about for years and years. I remember some of my earliest videos on this channel were about Groupon and just how much it frustrates me when people that don't make money wind up getting all this attention. These are videos that I did like years ago. This is 2013 and 2012, back in the days when my hair was still black and when I still had some remote bit of my sanity left. But one of the things that's just always frustrated me over the years are how the companies that don't make money or that have, the world in promises wind up getting all the attention, whereas the companies that actually, actually grind, just keep their head down, stay humble, try and build a sustainable business model, slowly make more money this quarter than last quarter or more money this year than last year, wind up getting ignored or tossed to shit. And you have companies that are actually trying to make more money year after year after year that are heavily, heavily, heavily shorted because just everybody's too busy chasing shit that doesn't make sense. Anyway, as a disclaimer, I own a small bit of this. Same thing as with GameStop. I said in Yahoo Finance interview that GameStop made up 1% of my portfolio because, let's face it, any of this meme crap that winds up going up like this can just as easily jump back down the next day. So I bought in an amount that if it does wind up going to 20 or even a 0, I'm not going to cry about. But for full disclosure, I own a little bit of it. Again, not something where if it goes down, I'm going to cry about, but just enough that I can smile a little bit if I see the line go up here. That's it for today. As always, I hope you learned something. I'll see you all in the next video, and let me know what you think. Let me know if you think that there's going to be more CEOs or more CFOs of publicly traded companies that are going to try to involve retail a little bit more, or try to think to themselves as they strategize their moves, their statements, their dividends, the timing of their dividends. If you think that they're going to start trying to focus on getting the retail investors' attention, getting the Wall Street Bets' attention, getting the attention on any of these forums or these sites, getting people trying to come up with organic ways to create a buzz about their company and try to use this to the full extent for their benefit. Because I think that that's what they're doing. I really think that that's what they're doing, and I think that it was probably a smart thing, given this valuation. Obviously, next week could always crash and go to shit, and if it does, then maybe I'm wrong. But let me know what you think in the comments down below. See you in the next video. As always, not financial investment advice. I'm not a financial investment advisor. If I was, I wouldn't solder on MacBooks to pay my damn rent into my mid-30s. But yeah, see you in the next video.